Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Phillips Edison Company Inc. quarterly report. Phillips Edison Company Inc. (PECO) offers a range of businesses and services through its high-quality, grocery-anchored neighborhood shopping centers. The company's key services include grocery store operations with top anchors such as Kroger, Publix, Albertsons, and a whole Delhaize retail space leasing for national and regional retailers, property management of 327 shopping centers across 31 states, joint venture ownership in 3 institutional joint ventures. These services aim to provide necessity-based goods and services in strong markets throughout the United States. The Phillips Edison Company Inc. stock price has remained relatively stable over the past year, despite experiencing a moderate decline of approximately 5.51% to 6.35%. Several key factors have contributed to this stability, including robust operational performance, strong leasing activity and rent spreads, consistent funds from operations, FFO growth, and a resilient business model. The company's high portfolio occupancy rates, record-high comparable renewal rent spreads, and increased core FFO and NAREIT FFO all indicate a strong ability to command higher rents and drive revenue growth. Additionally, the credit rating upgrade by Moody's in September 2024 and the increase in dividend payments demonstrate investor confidence in the company's financial health and commitment to returning value to shareholders. Overall, these factors have helped Phillips Edison Company maintain its stability despite broader market conditions. The primary drivers of revenue growth or decline are multifaceted. On one hand, rental income increased by 10.3%, fees and management income rose by 14.1%, and other property income surged by 23.8%. These significant increases in various revenue streams contributed to the overall revenue growth. However, a closer examination reveals that there is also a decline in revenue for the quarter ended September 30, 2025, with a decrease of 2.6% in total revenue, accompanied by a 3.9% drop in net income and a 2.1% decline in funds from operations, FFO. This discrepancy highlights the complexities of revenue growth and decline, underscoring the need for a nuanced understanding of these dynamics. Net income and profit margins overview. The company's net income has experienced a significant increase over the past year. For the 3-month period ending September 30, 2025, net income rose by 113.6% to $24.7 million compared to $11.6 million in 2024. This trend continued for the 9-month period, with a 43.4% increase to $63.8 million from $44.5 million in 2024. However, profit margins have declined over the same period. The operating profit margin decreased from approximately 15.3% to 13.6% for the 3 months, and from 14.2% to 11.9% for the 9 months. This suggests that while net income has increased, the company's ability to maintain profitability has been impacted by other factors. The company's debt level and interest expenses have undergone significant changes between 2024 and 2025. Notably, the total debt obligations increased by approximately 13%, rising from $2,109,543 in 2024 to $2,385,326 in 2025. Conversely, interest expenses decreased by about 14% during this period, dropping from -$24,998,000 in 2024 to -$28,544,000 in 2025. Management's outlook on company performance. The company's financial performance has taken a downturn, with revenue decreasing by 2.6% and net income plummeting by 12.9% compared to the same period last year. Additionally, funds from operations, FFO, have decreased by 6.1%. Despite this decline, management notes that they have made progress in expanding their portfolio through the acquisition of a new property with approximately 1.2 million square feet of gross leasable area. However, no clear strategy or outlook is provided to address the current financial challenges facing the company. The company made significant moves through acquisitions and divestitures during the quarter. Notably, one property with approximately 1.2 million square feet of gross leasable area was acquired, expanding the company's portfolio. In contrast, no major divestitures were reported, although some assets held for sale valued at $8,250 as of September 30, 2025, are being considered for disposal. The company's financial summary reveals that it has engaged in share buybacks as a means of returning value to its shareholders. Specifically, during the most recent quarter, the company repurchased approximately 84 shares of common stock. This action indicates that the company is committed to utilizing its resources to enhance shareholder wealth through strategic capital allocation decisions. That concludes the financial summary for Phillips Edison and Company Inc. Feel free to comment below, and I will be happy to answer them when possible.